Hello everyone. I hope you are doing well. Today I want to show you the process of selecting stocks and planning your entry, managing your trade, and your exit. Okay, this is quite a bit, so I want to move quickly. I don't want to take too much time. I hope I can do this in 10 to 15 minutes. Let's see. So, first of all, I want to make sure that all of you download TradingView charts on your mobile phones. You can just also use it on your desktop too. That's fine. But I want to encourage you to use it on your mobile, get used to it so that it's readily available. I really believe that once you get used to this, you'll only need to spend about 5 or 10 minutes per day on this. It really should not take much time. Okay, but consistency is very important. And remember the old adage, quotation from whoever it was, I don't remember, but I had given this last year: plan your trade and trade your plan. Okay, plan your trade and trade your plan. So we've got a plan. You got to stick with the plan, no matter if it's a loss or whatever happens, stick with it. And it's very important. That's where you will make consistent profits long term. So I have a watch list here. And on the top of my watch list is Nifty. As you know, that I usually look at Nifty just to give us an idea of where we're headed. We had dipped down below June, and then we've been on a gradual comeback, rising back up again toward previous levels. And we hit a resistance here, came back down, broke through that bottom support level that was here. It broke through that resistance, and then again it went up again. It's swinging. So you'll notice that it's a swing high and swing low effect again with Nifty. Just keep an eye on that. Now, first one on my list is Federal Bank. And what do? I had already drawn an all-time high. Now, of course, the all-time high is a little bit different now because this all-time high has already been breached. So I'll move it up a little bit further. Here's the all-time high. Okay. So what are we doing? We're looking for stocks where the current price is generally above the 20-period moving average. And the 20 is above the 60 or the 50, whichever one you prefer. And the 60-period moving average is above the 200. I've used the blue line for the 20, red line for the 60, and kind of the yellowish orange looking line for the 200. All right. So I'm not looking just for this pattern, but I also want the stock to be on an upward move. Okay. But you will notice that there are some times where you'll have all this sideways move. Whenever the stock is in a long-term sideways move, just leave it there. Don't waste your time. But once it starts moving up and creating this pattern, all right, put it on your watch list and keep watching it carefully. Okay. Now, once this pattern is there, where the stock price is above the 20, 20 above the 60, and the 60 above the 200-period moving average, okay, then at that point, all right, what we want to do is we want to make a plan for entry. How do we plan? All right. You look for the swing highs and the swing lows. All right. So I'm going to take this tool for a horizontal line, and you will notice that here this horizontal line that I've drawn, and I'm going to call it support resistance. All right. And so this support resistance line right here, by using that, you will see how the stock was at this point: swing high, swing low, swing high, swing low. You see that? And it went on like that for a few weeks. All right. And so at that point, what I would do is I would put a support resistance line at the swing low, and then I would add another support resistance line at the swing high. Okay. Then I would wait for a possible entry. And I would wait for this support resistance line, the top one, which would be the actual resistance. And the bottom would be the support. All right. So I'm following this. You see this? Up and down, up and down. All right. And I'm waiting. What am I waiting for? I'm waiting for this resistance line to be crossed. Okay. Now, as soon as that resistance is crossed, you hear this? See this line right there? As soon as it's crossed, what I will do is I will put about 20% or 30% of the capital that I intend to deploy into that trade. All right. And then the swing low right here, I would make that my stop. My stop loss would be right there. My entry would be right here. And I will call that entry. Here it is. Okay. And that would be my entry. All right. So I'm waiting and I'm watching and waiting during this entire time. And as soon as this resistance is crossed, I would enter with about 20 or 30%. And then I put my stop loss at the swing low. All right. You got that much? I want to make sure that you follow me clearly on this. Okay. So I enter with about 20 or 30%. What is 20 or 30%? Well, I've suggested to new traders that you could start with about 3,000 rupees and use about, enter into a maximum number of 3 trades, 3 different companies, 2 or 3. All right. So if you're using 3,000 as a rule and as your capital, and 1/3 of that, all right, if you're dividing it into 3, then it will be 1,000 rupees. So 20 or 30%, you would enter with about 200 to 300 rupees right here. That might be about 2 shares of this one. That's all it would be, 2 shares or 3 shares of Federal Bank. And you would enter. And as soon as you enter, at that same time, you put your stop loss at the swing low right here at 103.90. You can round it up to maybe 104. All right, that becomes your stop loss, 104. Then you enter, and then you wait. All right, what are you waiting for? Wait 2 or 3 days to confirm that this move is firm, that it is moving up. But look what happened. It went down one day, gapped down, and then it came back up again. All right. Although it gapped down, it didn't go down enough to hit the stop loss. That's fine. Now, if it hits the stop loss, fine, you take the loss. How much would be the loss? Let's see. You take a tool called the price range, available on your mobile as well. Okay. And you could put you can start the calculation here, and then all the way to your point of entry, you'd be at about 8%. So if you quickly lose and the trade goes south on you, goes bad, you would lose about 8%, which would be about 8 rupees per trade. And if you had entered in 2 or 3 trades, 2 or 3 shares, that would probably be 20 to 25 rupees right there of loss. Okay. All right. That would be the risk that you are taking. Remember, you cannot calculate your profits beforehand. There's no way to know how much you will make a profit. But you can calculate your loss beforehand. Okay? The only thing you can control is your losses. So control it by using a clear stop loss. And then if the swing low, see the swing right here, the stop loss possibility is about 8%. If that's too high for you, then keep the number of shares less, maybe 1 or 2 shares, right? Like that. Take 20 or 30% like that. And then after it moves in a proper direction, then you can add another 20%, another 30% like that until you get to the 100% of your capital that you intend to deploy. All right. I hope that makes sense to you. And then once you get to another level, now, do you notice another swing low and high right here? Okay. Once this crosses and goes above this next resistance, which is the all-time high, what I will do at that point is to take the stop loss and I will bring it to the next swing low. That's the next swing low. All right. And then I'll keep following that. And then if the stock price goes even higher than that, Okay. If it goes even higher than that, then I would take the stop loss and go to the next swing low right there. You see that? Next support resistance level, like that. Step by step, swing by swing, you follow it up. Okay. You follow the stock as it goes up. All right. That's what we're doing. That's what we're doing. Entry, planning for entry. The next one on my list is NTPC. I'm showing you some actual samples so that you can see what are the ones that will look good. Now, with NTPC, we have the stock price above the 20 period moving average, the 20-day moving average above the 60-day moving average, and the 60-day moving average above the 200-day moving average. And I want you to watch, look carefully at these two green lines that I've drawn. Okay, these are trend lines that are creating a channel pattern. Now, in my file, Learn to Trade, I have a section in there. I have some videos linked in there on how to draw these support and resistance levels. You can take that and learn how to draw these levels from that, okay? That is a video done by someone else. It's a good video. I have not done one on that yet. Maybe someday in the future, I will do that when I get time. But if you notice this swing right here, okay? The swing is swing high, swing low, but then as it goes up, there's another swing high and swing low. But overall, there is a pattern. See that? And that is a channel. It's like it's following a particular channel. And that channel, you can actually wait out the entire channel and follow that if you want. And that's, you'll notice there's quite a good profits to be made there as well. Let's say you entered on the low of that channel and you waited until to where the price is today. I think it's somewhere here. I'm not sure. Let's say it's right there. That would have been about 111% profit right there. You get it? Okay. So that's one way. But I'm watching and observing this because by looking at this, you will see that you're going to go up to that trend line and it may not cross above, it will come down. And this bottom of the trend line seemed to also act as a support. Although, see, we have several places where it didn't go up all the way to the trend line and it stayed on the bottom. Okay. All right. So let's go back to where we were. Now we are looking at this and saying, okay, this looks good. All right. And what do we do? How do we plan for an entry? Now, I am aware that, this is here as a resistance and it could, face the resistance and come back down, or it could break down again. So what I do is I look at the swing high, swing low, and I put a support resistance line just below that swing line, high and low right there, and then the swing high, another support, another resistance level. See, that's the top of the swing high and the bottom of the swing low. So I would just leave it right there, and every day just open it, take a look. All right, where is today's price? Where is it moving? Where is it headed? And I would wait until this support level or this resistance level is crossed. Once that resistance level is crossed, all right, here's what I would do is I would enter with about 20 or 30% of the capital that I intend to employ, and that would be my entry. And then I would take the bottom of that swing low and I would put a stop right there. That would be my stop loss, okay? And then I would wait and wait for that to continue up higher. And if it continues moving higher, then what I will do is I will enter with another 20 or 30%. Now, here, because we have this trend line as a resistance, I'll be watching very carefully as it gets closer to that to see if it breaks out. If it breaks out, then that's good. Then I would just begin to move my stop loss to the next level of the swing right there, and then I would keep following it as the price goes up. Okay, but it could get to this and swing down again. That's a possibility. Another one that I'm looking at is Ashok Leyland. Okay, Ashok Leyland is a stock that is also in a channel pattern, as you will see. But I'm also looking at the price above the 20 period moving average, although today it has gone below that, and the 20 above the 60 and the 60 above the 200. All right. So what do I do here? Same thing. Now I want to show you a little bit earlier. If I were to look at some other entry possibilities, like right here, look at this. Okay. If I was looking at this time to enter, what I would do is I would take this support line, I would put it below here because I'm noticing that the price doesn't go below that. Okay. And then I would take another support line and I would put it at the top right there. Okay, that's the swing high and swing low, swing high, swing low. All right. So what am I looking for? I would wait and I would wait for the price to cross this resistance. And here you will see that it has crossed. And that as soon as that crossed, this would become my entry, and the bottom of the swing will become my stop. And then I would wait. All right. I would enter with only about 10% or 20 or 30%, something like that. And I would wait. All right. If it goes down and hits my stop loss, I take a small loss, get out. Okay. Forget it. But knowing this trend line is there is a very good possibility. The probability is probably about 70% or more that I would follow this trend line. All right. So let's say I entered at this level here and I would wait. Now, this time right here, maybe it would be 1 or 2 weeks, would be quite discouraging because it's just going up and down. Look at that, up and down. And then it goes even further down. And this was your entry. It begins to go down. And how far the down? Let's look. Let's look. And I'm gonna show you what happens. You know, psychologically, this can become difficult for some people to follow this. Look at that. You entered there, but then the price went all the way down 5.5% right there. You're losing 6.6% on each share that you enter there, right? Let's say you entered with three. That would be about probably about 180 rupees loss, something like that. No, maybe about 18 to 20 rupees loss right there. 18 to 20 rupees loss right there. Okay. So you're hoping for a profit, and then all of a sudden you waited for 1 or 2 weeks and the price goes even further down, can be quite discouraging. So I recommend that you don't look at the numbers. I do recommend that you don't look at the colors and all of that. Ignore all that. Look at the charts. Okay. Because when you look at the charts, you will see the trend line, you'll see the channel pattern, and you will see the swing up and down, up and down. And you will notice that this has not gone below the trend line, nor has it gone below the swing low, and which is where the stop is. So you're still in safe zone. And then look what happens in the next few days. It rises above 1, 2, 3 days of moving up, and then another 2 days of coming down again. Look at that. And then you stay in the trade and look what happens. And then it pushes up to the next level. All right. It pushes up to the next level and begins to consolidate and goes sideways. All right. And then it comes down again. And then it moves up again. Look at that. Up and down, all the way again. That would have been more than 100% right here. But several times, okay, you would go sideways, go down, sideways, sideways. Look at that long sideways move. Can be quite discouraging. But if you stay in the trade, and even at this level, you would have your resistance line drawn right there, and your bottom support line drawn right over here, and you'd be waiting. Okay, you'd be waiting to break out of this level or break down, and this becomes your stop. And so this, you're waiting to get stopped out or to cross above the resistance, and look where you are right here. You'd be right here. If you're holding a Ashok Leyland all this time, you'll be right here. And what do you want to do? Do you want to? You've probably already gained about 80% profit right there if you entered here. Okay, let's take a look at the exact amount. If you had entered down here, I'm sorry, it's not correct. Let's say that you had entered at the swing high, and you entered right here. All right, what am I doing wrong? Here it is. Okay. And you'd be sitting at profits of about, all right, why is it showing minus 25%? No, it's actually sitting at 25% profit. Let me try it again, and doing something that's not accurate. Something is not coming out right. So showing the negative. All right, let me just try it again. Something is, just give me a minute. I will get this worked out. Here we are. Let's say if you entered right there, you'd be sitting at profits of about 35%. Okay, you can get out right here and take that money, or you can wait and see if it continues going beyond this all-time high that would take you to 40% and further. Okay, all right. So I hope that makes sense to you. So if you're watching it right here, let's say you're looking at it right there, you'll be waiting for that entry. Now, if you're waiting right here, right now, if you take a short Leyland and you say, okay, I want to put this on my watch list, all right? Here's what you would do. Now, the all-time high is your level of resistance, which is usually quite strong. And you have your trend line that's right over here. Look at that. Okay, so what do? You wait. And what are you waiting for? Waiting for it to cross above the all-time high. Once it crosses the all-time high, you enter with about 20%, and you make this your stop loss. What is this? This is the swing low. That becomes your stop loss, and the all-time high will become your entry, and you will allow it to go further up. And if it doesn't go up, and if it goes down, you let the stop loss stop you out, and you take the loss and just get out. Now, what if it goes below and comes back up again? That's fine. You leave it. And you might want to enter again if it still looks good, but you have to be willing to take these chances. All right, that's Ashok Leyland. Next one is BEL. All right, Bharat Electronics. All right, my net is a little bit slow, but that's fine. Look at this stock price above the 20, 20 above the 60 above the 200. That's what we're doing. Okay, all right, another possibility of entry. So what do? Are we ready to enter right now? No, not yet. Okay, what I would do is this. I would begin to draw the level of resistance. See this line here? Numerous times at this point, okay? Numerous times at this point, there was a level of resistance that could not be crossed. But then here below, there's a level of support that also is not allowing the stock price to go below that. So there's a swing high, swing low process going on right now. So what do? You wait. You wait for this support, this resistance level to be crossed. Once it crosses, then this becomes your stop loss. The bottom of the swing becomes your stop loss, and this becomes your entry. Okay, how much will you enter? Take about 20 or 30% of your capital, enter in. All right, then wait. Wait for what? Wait for the move and see what happens. If it continues to move in the direction that you want, further up, then you enter with another 20 or 30%. And then if it continues up, enter with another 20 or 30% until you get to your total 100% of the amount that you want to enter into the stock. But if the price quickly drops and goes below this stop, and you get stopped out, at least you only lose that small percentage of the 20% of the capital you were intending to put into this trade. Okay, so make sure you do that very diligently and carefully. All right, so the next one on my list is Indian hotels. These are all stocks that seem to be in a good position right here. And then here also, you will notice that it's following a nice channel pattern for quite some time. All right. I'm not going to go into that much detail because I don't want to take too much time here, but you will notice what's happening there. Okay. That channel has been respected and being followed for quite some time. And look carefully at this. Now, here's what you want to do. All right. See, it has crossed the all-time high and the channel has been broken, which is very good. Once the channel is broken, it shows that there's a possibility for a very good bullish move. All right. Now, along with the channel breaking out, and you have the moving average pattern that we're looking for, several things that are looking good for Indian hotels. So, what do we do now? You're not in this trade, then what do? Then you draw these two lines as your resistance level and your support level right here, and you watch it for the next few days. Up and down it will go. All right. Now, if it goes above this resistance level, you enter with 20, 30% of your capital. If it doesn't, now, if you do that, then as soon as you enter, this all-time high becomes your stop loss. All right. And then if it goes further up, then you enter with another 20, 30%, right? It continues further up, enter with another 30% or 20%, whatever, until you get to your 100% of your capital. I hope that makes sense to you. Look for channel patterns. Look for the stock price above the 20 above the 60 above the 200. Then you enter and you wait patiently. Don't look at numbers. Don't look at colors. Don't look at percentage points. Just look at the charts. Make your decision for entry based on your charts, decision for staying in the trade based on your charts, and all the decisions base it on the charts. Next one is Coal India. Coal India, what do you do? Okay, Coal India also right now it had broken out of this the trend line, but then it's dropped below that again. So does this look like a good possibility? Well, what I would do is I would draw to support this resistance. I would draw it up here, and then a support line. It should have been right here, but I don't know what's happening. Let's observe the next few days. Today was was a swing low further than that support line. And so I would just add one more line at the next swing low below that. Look at that. So I would just wait there and see what happens. What's going to happen tomorrow and this entire week? Is it going to go up, or the next week to going to go up and down here, or will it come back up here again? I want to see. All right. If it goes up and down here, I would wait for an entry. I would wait for a breakout from this resistance here. But if it continues up and down here, I would wait for a breakout out of this resistance level, and this would be my stop loss. And if it breaks out of this resistance level from here, this would be my stop loss. All right. Any questions? Let me know in the comments below. Be glad to help you out. And HPC is another one. Look at this. The swing high, swing low here, and the stock price above the 20 period moving average above the 60 above the 200. Okay. And yeah. All right. So this is what we're looking for. As soon as it breaks out of this resistance level, you enter with about 10, 20, 30% of your capital and make this your stop loss right there. Okay. And that's what you do. And then you wait. Okay. And then you wait. The key is to have a plan, trade your plan, and be patient. Patience is important for this. If you're not patient, and and the way to help you to become patient is to look at these charts. Okay, look at the charts and be patiently waiting for the next move. Okay, but if we get impatient, what happens is we'll see a red day and get discouraged, become fearful, and we'll sell on something that may still be in a good move. Okay, but because of our lack of patience and lack of discipline, we can end up losing money that we normally would not have to lose. The only money you should lose is when you get stopped out and you're following your plan and you're carefully selecting the amount of money that you're entering with based on the charts. Last one is Tata Power, not really doing well. And the moving averages are not really looking well. So I'm going to just take it out of my watch list for right now. And I'm not going to pay much attention to that. Okay. So what are we doing? And what do we want to do here? We talked about how to select the stocks by looking at the moving averages and looking at the overall trend. You want something that is moving up, not just that the moving averages are in its right position, but also you want to look at the chart using your just eyeballing it and make sure, is it moving up or is it going sideways? If it's going sideways, like right this, okay, don't enter. Even if, see, there might be some places where where it's looking good, like right here. Look at this. The 20 is above the stock price at that level was above the 20 above the 60, and the 60 above the 200. Looking good, right? But then look what happened. Just kept on going sideways. So at this level, what I will do is I would, I would look at this resistance here. See this? And I would put that resistance up here and watch it carefully and wait for that to be broken. Okay, once this resistance is broken, then I would take the chance and enter. All right, make sure that the moving averages are lined up properly and the resistance is broken. Then I would enter and keep the stop loss at the swing low, but I would enter with about 20 or 30%. Okay, then once it moves further up, then I would enter with another 20 or 30% and on like that. Okay, so don't enter just because you see this, but you want several things that are lining up together. All right, here we are. Okay, and Federal Bank is looking good, but here it's coming close to the all-time high, and it's faced resistance. You want to watch it very carefully. All right. Now, will you enter? Well, if you're not entered in Federal Bank and you're trying to figure out, is this the stock that I want to enter? Well, here's what I would do. Same thing as we said before. You want your support resistance line to be drawn. Here, all-time high is already there. That is a good resistance level. So you want, and then the swing low is right over here. See this? Swing low. And let's take this support line here and bring it up here. See the swing low? That's a swing low. So the stock is going up and down, swinging up and down at this level. So you wait. Wait for what? Wait for this resistance, which also happens to be the all-time high. Wait for this resistance to be broken through. Once the resistance is broken through, then enter with 20 or 30%, and then put your stop loss at this support level here. Okay, and then begin following that. And then once it is broken, you enter with 20 or 30%, and then you wait 2 or 3 days, and the price continues to move up, enter with another 20 or 30%, and then the stock price continues to move up, enter with another 20, 30%. But remember, it may not be moving up 1, 2, 3, 4 days like that, but it may move up maybe 2 or 3 days of a move up, and then it may go sideways for a week or 2 or 3 weeks, something like that. And then it will go up for 2 or 3 days and then go sideways again. That's the trend for many of these stocks. Now, but you might be saying, well, what if it doesn't go up? It just goes down. Fine. Then I have my stop loss right here. All right. My stop loss is right here. I take the loss and I get out. All right. By the way, if some of you, just an update on a personal note, it's been almost a year. Some of my stocks have been, just kind of held because my stop loss did not work. I was out of the country, and last November, and so I mentioned to you a few weeks ago that I went ahead and put my stop loss. I put a stop loss on those stocks as well, below the next swing low, like right here. And I put it there and I thought, okay, if it goes up, let it go. If it goes down, let it hit the stop loss. I am not going to hold it any longer. And I have been stopped out of 2 or 3 such trades this year already, incurring some huge losses, which is fine. At least the rest of the funds are now available for me to trade and make some good money with. And I could manage my trades even more carefully because I've been learning from my mistakes. Okay, so yesterday let's see, what was it? Manappuram dropped below the swing low again, and at that point I put my stop loss and I said I'm ready to get out, and I've incurred more than I think about 50% loss on that one, and I got out. Okay, now I'm no longer, in that predicament anymore. So now when I get stopped out, I'm only getting stopped out with a smaller amount, and so the percentage is much less. I won't be losing such a big percentage. I may be losing maybe 5 to 10%, not much more than that. Okay, and it's all much more planned than I was before. All right, so I've gone through all of these, and so selecting the stocks, which ones to select, and how to wait for the proper entry. It's like a cat waiting for its prey. Wait for the entry, and don't enter until you've gotten that breakthrough or breakout. Once it breaks out, enter with a calculated amount, 20 or 30%, and then strict stop loss, right? And then wait for that what to happen and the next move up. You enter with another 20, 30%. Keep doing that until you enter with your full capital. Okay. All right. Now, how long do you hold on to this, and how much profits do you want to make? Now, I mentioned to you my Learn to Trade file, and you will see a section called taking profits. And I put 4 options. Actually, it's not 4, it's 5. Okay. Now, if you have this file, you can open it up and take a look. The first one, enter trades just for the day and take a small profit, let's say 0.3%, 0.5%, and exit the trade. Now, this is almost like a day trade, but you're not taking the trade as an intraday trade. When you take the trade as an intraday trade, they give you leverage. In other words, you are borrowing money from the broker. Okay. Now, the problem with that is that your entry and your exits have to be very good. In other words, you got to make sure that you make some good profits, and the amount of profits needs to be really good, because the brokerage fees, the taxes, and all that are much higher. And so for one trade, you may be paying anywhere from 200, 500, 600 rupees on the fees. And so you've got to make maybe 2 or 3,000 rupees to really make that to be profitable. So it's quite risky, but you can do something similar to that with a cash trade and take a small profit and get out. That's one possibility. Okay, I've done that several times, and you make a little bit of profit, and the brokerage fees are very minute, and you're not going to spend too much money there. Okay, but you're not going to make a whole lot of money, but but you'll make a little bit. Another possibility is to set a target for yourself at a certain percentage. It may be 5 or 10% or 20%, something like that. And you stay in the trade until you get to that level, and then you sell, take the profits. But remember to make sure to keep your stop loss intact and follow the trade carefully. Manage your trade carefully. Okay, you can set the target and stick to that target. Third option is to divide your capital into 3 or 5 portions. I mentioned for our new traders, take 3 trades maximum. That's enough. 2 or 3 trades are enough. More than that is difficult to manage it, and 2 or 3 is enough. So enter into that many, and then keep following it carefully every day. Follow it carefully, give the authorization, set the stop loss properly, and only look at your trading view charts day by day. And then what you do is at the end of the month, okay, sell the one with the highest percentage of profit, or sell the one with the highest rupee amount, whatever it is, and you want to take that profit, you want to take that money. That's another way you can do it. Okay. Another fourth one is you can ride the entire trend and take a higher profit. But it may be taking you several weeks and months, but you're going to make much higher profit. You can stay with the trade as long as the uptrend continues. And you can exit when the 20 moving average crosses below the 60 moving average, or the 20 crosses below the 200, or when your stop loss hits out. All right, you get stopped out. Until then, you keep riding the wave. You keep riding the trend. All right, that's the fourth one. And then finally, the fifth one, something I don't recommend so much, but some people do this. You can ride the trend and use a trailing stop loss of -2% or -5%, and you can follow along. And I don't really care for that, because the 2%, 5% doesn't always work, because of the swing high and swing low. Okay, and you can easily get stopped out and lose lose money for no reason because it might. So it's better to put the stop loss at the swing low, okay, rather than the percentage. So watch the swing high and swing low, and be more careful about your entry and your exits. Okay, I hope this helps you, and I've shown you several samples of stocks that I've selected that are looking good, and they were properly selected. Now I went through probably more than 150 companies, 150 stocks. I opened up each of their charts one by one by one by one to try to find these few 6 or 7 stocks that are moving in the right direction. Okay, so I had to go through a lot of them before I found a few gems. That's what you got to do. Make a long list, and then in my Learn to Trade file, I have a link there where I've given a suggested watch list. And then, of course, any of the Nifty 50, Nifty 100, and all that, those bigger companies, the mid cap, Nifty mid cap is good. All of these, you can select those companies, you can put them on your watch list, but then select only the ones that are moving in the proper direction. All right. So, what did we share today? How to make the selection. Look for the stock price above the 20 above the 60 above the 200, and look for a pattern where it is actually moving up. Then next, draw the support and resistance lines, okay, and watch the stock as it goes up and down, and enter only after it crosses that resistance level. Once it crosses it, then put your stop loss at the next swing low below that, and then watch it carefully, and then watch your charts carefully. And then if it continues moving in the right direction, enter with another 20-30% until you get to the 100% that you intend to put into this. Okay, that's it. And then I've shared with you some different options of when to take profits. All of that available in my file, Learn to Trade. Please make sure to download TradingView. And if you have not done that, look below in the description box below. You will see a link to that. You can open up a free account. You can do all of these things with a free account, and that's all I have to share with you today. And any questions, comments, please leave it below. Leave your questions below in the comments section, and I will do my best to help you out. And maybe if necessary, I could do another video like this. Thank you. God bless you.